The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. This is the Thursday, Thursday edition. This is November the 1st, end of the year coming, and it is my pleasure to be here to follow 2 hours. Steve, and thank you very much, Steve. It was a great show, as always, and we have shows all the way through until 6 o'clock today. Don't forget, straight after my show, Larry Pesavento, Commodities Hour, Futures Hour, and he discusses commodities. Just a fabulous show, as always, I'm sure. And we've got Dave White, we've got Ken Sharif, we've got Tom O'Brien, 4 to 6. Now, let me get to something that's really important. When I was on Monday, before I got that huge power outage, and the power outage is continuing, it won't be on. I just spoke to the guy. They're busy working, huge job. He said one tree came down this little on the side street here and just literally smashed the wires, and so they're busy with that. Maybe he said midnight tonight. So even without electricity, I've been trying to get my my computers all charged up via the automobile outlet. So I've got the hour all ready here. We're ready to go at 877-927-6648. And I've still got that tree, but that tree that came down on my property is cut in pieces, and kind of chunk of it is gone, and some of it is here. Now, what's really important about this particular market, when I was discussing on Monday that there was this V-shaped decline in the, I wonder if I can find it here. I'm going to move to the white chart. Let me just do that. I want to just double check. I don't want to use up all my battery on my cell phone. Yep, this is it. When I was looking at the V-shaped decline in the 120-minute chart right there, that's the diamonds. I want to go to the DIA right there. Oh, I haven't drawn it in. It's on the other computer. But there was a V-shaped decline. And that V-shaped decline said from there to there, if you're looking at Tiger TV, or if you're on like I am right now, looking at tfnn.mobi, you will see that what has occurred, very interesting, a declining wedge, so a little pop-up, but it couldn't hold yesterday at the opening. Pulled back, but it held the low, and the low of 130.09 was the 130.09 has held, and now what we see is we've got a very strong leg. Let me say it's 103.09, 103.9. Yeah, so this becomes AB. This is leg C in the 120-minute chart. Where would I anticipate that it should go to? Oh, good, I can see the charts. They're very clear. That's great. And I've got the white background. Yes, it's because that's more fully notated. Now, I've only got one hand, so I'm going to only got one hand because the other one's holding the phone, because I do not have that fantastic equipment that we usually use with a microphone and the... It's almost, I was telling someone the other day that with technology the way it is, we can have, for very little money, we can have an entire studio. And when I was talking to some musicians just the other day, we were talking about the incredible equipment that we have. And, you know, that's reflected. It's reflected in the market. It's reflected in the way things, when they are good, are fantastic. How you can have, I don't know if it was fantastic, but I'm talking about speed. How you can have a hedge fund do hundreds and hundreds of thousands of trades in the first minute or so. Actually, I read it was millions, but let's talk about hundreds of thousands. And yet, when we have an event, a nature event, that creates chaos and havoc, we are all just stuck. I have 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 7 monitors, and only one is working. I mean, that's where we are. So looking at this particular chart, using the technique that I've developed, the ChapmanWave technique of merely, it's the simplest technique, here again, the same sort of thing. Simple technique, simple concept. You go from the lowest, most identifiable low bar, and you merely count each successively higher peak. Well, this is leg C. The stochastic's only at 47%. The MACD is moving. So this, at this particular point, while I have to call it a counter-trend oversold bounce, it's a little more than a bounce because there's short covering. But this is where you see wood stocks are starting to work well and which stocks just cannot get anything going. For instance, I haven't had a chance to check now, but earlier on when I checked some of the stocks we have in my opening call, that's my daily service that comes out every day, well, a little early today, but usually by 8:35, 8:40, I've got everything out, 6, 7 charts every single day, just a comprehensive. I spend hours at this every single day. Why? Because I want to know that we're on the right side of the trade, which is the reason why we have 3 short positions and we have 2 long positions. And what's interesting is that one of the short positions, which has been one of the hottest stocks in the market for a couple of years now, it gapped down this morning. And here you are with the market up. The Dow's up 155 at 13,253. The trend line I'm looking at in the diamonds, the Dow Diamonds, which is the trading vehicle, the spider trading vehicle for the Dow, has resistance. It's at 132.16. It's about 30 points off, 0.30 off the actual number. And it says at 133.11, there's that 200-period exponential moving average, and it's really strong resistance. So that's the Dow Diamonds. I just want to do that quickly to show certain things, and I also wanted to show ESZ12. I haven't updated this at all. Yep, this is leg C, and what I said is that the 1421 is a very strong resistance. I spoke about this the other day when I was on, in the 120-minute chart of the E-minis, and the E-minis right now in leg C up just snuck above the 1420, I believe it was 21, covered right now, 1421, 200-period exponential moving average resistance is popped to 1423.50. Right now, you're looking at very good support at 1410 if there's a very sharp sell-off, but my guess is that the most recent high of 1418.25, that was the high of at 6:30, that's 4:30 in the afternoon. Was that in the morning? Yeah, 4:30 in the morning on the 31st. That was yesterday. How time flies. Now what's going on is that the E-mini the E-mini daily chart is in a very strong leg A up above the 9-period exponential moving average. Now, what I was about to say is that these techniques that I teach, how you can go, and I show subscribers in great detail every single day, how you can use the ChapmanWave, how you can go from the lowest, most identifiable low bar to certain peaks, and each peak, each successive peak gets named, gets labeled A capital B capital C on the upside, and on the downside it's lowercase, because we're talking about troughs, and it just quickly identifies, are you in an up move. So now let's go through some of the other aspects. We've got the S&P up 14 at 1426. That's the cash. The composite is up 39 at 2016. The VIX has slipped to 17.30. That's what I was saying this morning to subscribers. The volatility index starts to decline. You can see a pullback, and the VIX correspond to a rally in the market. We're going to go to our very first caller. We have got, I missed the name. Our first caller will be, hi, first caller. How are you?
Good. And you?
Who am I? Is this Richard?
Yes.
Hi, Richard. How are you?
Good. Very good.
So you would like to look at?
STX, which Steve and Tom said that it was going down, but it looks like it's going the other way.
Oh, all right. Well, you know me. I'm not going to get involved with what anybody else says. All I'm going to do is look at the chart, and all I can say is this.
I have a put on that STX.
Okay. So STX is Seagate Technology. It's at 28.02. Now, this is interesting. The techniques that I teach and I talk about on the show, and I talk about especially in my Master Trader series, of which I'm having one coming up, one that is 2 days, a live webinar, December the 6th and the 7th, Thursday and Friday. I'm going to discuss these things in great detail, much more than I'm able to do on a show like this, because on a show like this, obviously we have callers, and I have to go to, I want to go to the questions. But I love to bring up what is really important. And if anyone's looking at the chart right now, what you will see is that in the case of STX, which is trading at $28, round number, up 67 cents, Seagate Technology. While I'm going to do this very quickly, since you have a put in it, I want to get to this very quickly, because it is holding the 200-period exponential moving average. If one never had this particular indicator, this tool, you wouldn't know that it hit that exact exactly at 26.75 on the 23rd of October. Then it turns that white line that you can see in the chart that I'm showing right now, that's the 9-period exponential moving average. Now, what happened is it ran towards it. It tried to get above it. It went above it 2 days later on the 25th. It went to 28.37, so the low of 28.675. It manages to run up 1 3/4 points. Then it just can't hold the 9 EMA. In fact, what it does is it pulls back with a doji candle yesterday. Ha! This is where it gets interesting. Yesterday, again, the slightly rising 200-period moving average now has a support of 26.77. The last one was 26.75, only 2 cents higher. But the stochastic is giving a positive divergence between the price and the stochastic steadily moving higher. The MACD is flat, so the MACD is giving no signal right now. Technically, it takes the last signal of importance, and it maintains that until it crosses positive. And right now, it's just kind of neutral because the fast-moving average is on the slow-moving average. So today, it rallied. It hit a high of 28.33. 28.33 is 4 cents below the 28.37 high of 25th of October.
Okay.
So on a very short-term basis, I have to say to myself, this is trying to turn that 200-period exponential moving average into some kind of support. Now, the day is young. The fact that the market is up, how much percent is that? Let me just check. Market is up 1%. This is up 2.12%. Says, okay, what would you do? I'm going to ignore for a moment that you told me, in fact, I wish you hadn't told me, that you had a put on it. Reason being, I looked at this just briefly the other day. I hit it. You know, the serendipity comes into stock analysis very often, for me at least. I hit a wrong key. I'm trying to recall which key I want, what stock I was looking at, and SDX popped up.
Right.
And I thought, wow, SDX, I've not looked at Seagate for so long. I recognized immediately it was Seagate. So I looked at it, and I thought, this is very interesting. I'm going to explain to you. I'm trying with one hand quickly to do my notation here. I want to explain to you how certain things, certain aspects become very important when you're looking at different time frames. And if you're looking at the weekly time frame, you'll see it made a peak D back on at 32.55, back on the week of the 4th of May. Then it pulled back sharply. Everything gave a sell signal. Then it had a single leg up to a peak E, a higher peak of 35.71, week of the 17th of August. And it opened at around number 34. That was really important. When I was scanning it 3 days ago, that's what I noticed. So
I still have Royal Gold.
I'm sorry, what?
Yeah, I still have Royal Gold to ask you about.
Oh, okay, you still have Royal Gold. Okay, good. So what I'm going to do is I'm going to do a quick analysis because I don't think there's that much to the upside, but you want to know how much there is and how much risk you've got. I'll be back. We'll be looking at SDX in a moment.
Yeah.
Basil Chapman.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, Basil Chapman. This is the Tiger Technicians Hour, and I'm just getting final word from my engineer about our Great Panther Series Great Silver Giveaway winner, and I will be able to give that very soon. And let me just get this out the way. There it is. And we're on with Richard right now, and Richard is looking at SDX, and SDX is, in fact, I'm just trying to see, I haven't quite got this computer set up the same way as I always with my desktop and my other one, but I figured it out now. I've got to stretch the charts out a little bit. So this is what I'm looking at. Richard, which option do you have?
I have in the Januaries, I have the January 1328 put. Now, they told me that this STX was going down to maybe 14 or 15, and so I went out to January.
Okay, just to remind me again, you've got which one?
I got the January 1328 put.
13. Okay.
Yeah.
So actually what you're doing then is you're writing it about point for point, right?
Yes.
Okay, so you know what I'm going to suggest? This rally is quite important in the sense that if it starts leg B up above, and I'm going to stretch this out, I can see what I've got. I've got one particular frame that's working very well, so I'm going to stay with that. If this STX Seagate Technology goes above 2837, It starts leg B, and leg B could very well test the 2903 high of the 16th of October. The pattern that I'm looking at now, what makes this very important to me, the reason why I want to get to it and talk about it, because if you have the put, but if you extend it out to January, I'm going to make a suggestion about the position that you have.
Yes.
If it starts to hold strongly above 29.50, now it seems like it's only $1.50 away in this kind of market. That's not a big deal. It is a big deal for this stock. One of the reasons is that the support that it had at 29.60 back on the 20th of September, if you get back into that range, it can go a little higher. Now, when I'm looking at the weekly chart, I did a little work on this. I'm hoping that I'm able to stretch it out here. I'm going to click. I'm going to go like that. I'll see in a moment whether I've made a mistake or not. Yeah, you see what's happened is the stochastic and MACD have pulled back quite sharply, yet the price is holding pretty well. And because the price is holding very well, I have to put the caveat here to say that in the near term, I'm talking about 3 to maybe 7 sessions, there could be a bounce. My work on the weekly chart that I'd actually done the other day when I was looking at says I've got an alternate count. I don't want to put it in right now because I'm using one hand. I'm not able to do everything the way I normally do, that is in speed. So what I'm going to say, it's walking the 9-period exponential moving average in the monthly chart, and that is the start. This is the first day of a new month. So last month was looking terrible, but so far, 26.75, 27.70, 24. This is in fact this is very good because it is at this particular point what it's doing is it's saying, hey, I am in fact starting off the new month with an inside bar. So I just want to give you the caveat that I at this point don't see the downside potential until it takes out, and now I'm going back to the weekly chart, until it really takes out the low of the week of the 27th of July.
Right.
If it takes out 25.51, you are looking really good, because then what would happen is that you'd automatically, suddenly I've got another problem here. Let me see if I can resolve that. Suddenly what you've got is you've got the potential for a left side, right side price time match, which would take it down to the low of 21.62, which is, of course, what you want.
Right,
that
so I have to hang in there. I'm down $300, so I have to hang in there.
Well, you're down how much?
$300.
$300. Okay. So if you now, I'm going to do something that I do every once in a while. When you are down, you must not have the attitude that because it's going against you, you're now obligated to wait for a turn for it to come back down.
I hear you.
You know why? Because one, if it does, what I'm saying is the potential. If there's another very strong day tomorrow, and of course we don't know that, but if there is a very strong day tomorrow and it pops to the 28.55 level, well, now you're in a different ballpark altogether, because now we're looking at more upside potential than downside. That's the reason why I want to know if you're in option. If you were in a short position, it's a little different.
Right.
So, Richard, I'm going to say to you, please be careful. Think about it. Think about the cost. It might be worth taking the $300 off because you're looking for the big score. You'll be able to keep your capital. You'll be able to get back in at another point.
Yes.
So keep your stop quite tight.
Thank you.
Thank you very much for calling, Richard. And I'll be back with the winner right after this.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com, where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everybody. We are back. Basil Chapman, and it is the Tiger Technicians Hour, and we have a Great Panther Silver Halloween giveaway. And you can register all day. You're going on for 3 days. This is the second day. Tomorrow will be the last day. And we've got Richard in St. Cloud, Florida. He is the winner of the Great Panther Silver Halloween Silver half an ounce giveaway. Congratulations, Richard. I believe we had tried to reach you, and we weren't able to reach you. Maybe you're doing one of those things that happens to many of us. You're working. But congratulations anyway, and it's great to have you here. And if you want to call right now, 877-927-6648, we'd love to hear from you, and I would personally love to congratulate you. So that is Richard in St. Cloud. And let's go on with a couple of things. The volatility index has made a peak B. I'm calling it a peak B for now. And it is now under the 200-period exponential moving average. It's at 17.33. In the parameters that we've been looking at most recently, it's still kind of high. But I had said, and I'm going to state this again, that until or if the volatility index starts to trade in the 20s, that's when selling not only will occur in greater frequency, but the actual selling will intensify. And that selling, if it intensifies, that is going to be something very, very important. Why? Because as it intensifies, it'll start to test the lower levels, and those lower levels are going to be something that we look at. You're going to look at a stance and say, hey, if the Dow starts to break under that 12,900 level, that's going to be very important. Right now, all we can say is that the level that I'm watching right now says that in the teens, back into the 16 to 15 area, buying will resume. And back into the 19.65 higher level into the 20s, selling will resume. So this is going to be very important. Now, one of the reasons in my opening call, that's my daily service, very intensive look at the markets, one of the reasons why I have been quite prepared to look at the long position, look at the short position, is that on the long side, what we're looking at is there are certain stocks that are doing very well. And I feel that there is no reason why you shouldn't feel comfortable going along those stocks. And as usual, you need to have some kind of a buy stop. It's just very important. However, there are some stocks that have been very weak. And in fact, this particular rally right now is going to be a test of the fortitude of those particular stocks, because if they are unable to rally significantly here, it's saying that those stocks that I've considered possibly making hat-trick tops, hat-trick top, of course, meaning that the monthly is now kicked in. The daily is already given the sell signal. The weekly is, and then the monthly. That's going to be very important. So, well, let's go with that in place. Let's go to our next caller. We've got Dallas. We've got Freeman in Dallas. I read it backwards. Hi, Freeman. How are you?
Hey, Basil, how you doing? Basil, I got knocked out from the morning call on that Ford, and I just started a startup position when it was down 20 cents this morning.
I'm sorry. Can you say it again a little slow? I'm on the telephone, but it's not as clear as always. You what?
I went long Ford F when it was down about 20 cents this morning.
Yes.
A startup position. What do you think about Ford?
You know, it's such a strange stock. Every time I want to get in, it gives me a hard time. It either I barely do anything, barely make anything, and then I just turn my back for a second, and it has a big spike up. And then as you're about to get in, it starts to come back down again. I've got this Ford F is the symbol, folks. There's an alternate count that I've got, but right now, the stochastic's holding at 75%, so that's not quite as strong as it should be. You know, I think that you've got yourself a potential here for a stock that fund managers might be looking at, because it is definitely doing way better, but it's bogged down by the European financials. So that European side of it is an issue. But what I'm looking at is that the way it's acting, it's not giving back very much at all. It's making a stair-step move. It's made a kind of a cup formation in the daily chart. I think you've got, did you say you have a call position or the actual stock?
No, the actual stock, we got knocked out of the morning call before, so I just started another position. So.
Okay. So this is what I'd be looking at. I'm going to go, I hope it works now. Let me go I'm going to the weekly chart. The weekly chart says it's in a strong leg C up. The stochastic is rallying at 77%. It has it 80%. The MACD is good. I think you've got yourself a nice here. The most important thing that I could discuss right now is that if the monthly chart continues to walk the 9 EMA and it can slowly move higher, the fact that the market was down yesterday was neutral, and Ford had a great session. I'm looking at this yesterday during the day, and I'm saying, wow, that was great action. I think you've got yourself a nice entry point. Now, I'm also going to say this, that on the 120-minute chart, it is in A, B, C. Let me double check. No, it's in C up. Is that correct? I'm trying to do this once again with the one hand. Yeah, it's in leg C. I like the action. What will happen is that if it closes under 10.64, it might want to fill that gap between 1060 was the low, and right here, and 1039 was the high. But you know what I'm going to recommend? Have a little patience with this stock. I think you've got yourself a stock that has the potential to be quite a bit of a winner if the market itself just stabilizes, at least for the next few days going into the election. I'm not talking about the day after the election, but going into the election. And Ford should try for $11.35 to $11.40. If it does that, then on some part of your position, make a little bit of a stop, on some part of your position. But I think you've got yourself a nice entry point. More importantly, if Ford starts to break down, and if Ford goes underneath $10.20 in the next $10.20 to $10, that whole support area, if it breaks that, I'm thinking it's going to be telling us something about the market. So the rallying right now with the market, yesterday giving back a little bit today, I like it, but I'm also going to say to you, I would not want you to sit in any large position. If it was to close in the next 2 days underneath, say, 10.50, I would lighten the position up. And you have to, although I say to you, give it a little bit of room, it's more, I'd like it timed and priced. In other words, I'd like it to hold here above 10.83 to 10.90 for the next 2 days, and have one big spike above today's high, which would be really nice, and that gives me a little bit of comfort. So I like it. I think that money managers will try to find stocks like Ford as low-priced, counter-trend rallies that they can play, and if that works out, I think you've got yourself a very nice trade. And let me tell you something. If Ford, F is a symbol, trading at 10.99, down 17 cents, if it breaks into the 11.80 area anytime in the next week and a half, I think the fund managers are just going to push and push and push. This is what they're going to buy. So in that regard, I do like it. But if you're thinking of it as a trade that you don't want, it's not any intermediate term position, then you've got to have some kind of a stop. If it comes back down, well, you know how to do this. But I would say under 10.50, be a little careful, because then it's giving back the gains that it just made.
Okay. Thanks a lot, Basil. Appreciate that.
Thank you very much for calling. I always like to hear from you, Freeman. Now I have. Let me go to this because I need to. It might be right here. Oh man! I think we have another winner that we can announce. It is Norman in Michigan. So Norman in Michigan, you are a Great Panther Silver Halloween half-ounce silver winner. And I thought we had him in line. I was just a little long there. I didn't get to him. I didn't see it because I'm trying to do. No, I wish you. Oh, Norman, you hung up. Maybe you're trying to sneak a call in just in the middle of all your stuff that you're doing. We're still here at least for another 12, 15 minutes. Give a call, Norman, if you can. I wanted to congratulate you. I'll take you immediately the moment you call. I'll congratulate you right here live on TFNN.com. So, yeah. Now, I wanted to go through a couple of things. Actually, I've got my eyes everywhere. I've got the guys out there grabbing all the timber, the lumber that's out there. I'm waiting for an electrician. I've got, what a day. What a couple of days. Anyway, these are minor things. I was just telling someone yesterday that my neighbor, who was playing piano, I don't know if I mentioned this on there, was playing piano, looked out his window, saw the tree coming down, saw my wife drive up the driveway, and as she had gone past, the whole tree that was coming down, the tree smashed down to the driveway. I mean, how thankful can you be? You just got to be thankful and say, wow, that is fantastic. And she missed the tree down the street there, which must have come down maybe no more than 10 seconds after she drove under it. She didn't even know about that. She didn't even know about this tree until she heard the smash. So with that in mind, all I can say is we are grateful. We are very, very grateful. Now, here's the other thing that I want to talk about. So now you've got Ford. I wanted to go to something like a GE. GE is acting okay here. It's trying to turn around. It's not showing tremendous strength. But the most important thing about GE is that if it doesn't, it's trading at 21.34. We tried to stay long in this position, and we were not able to. So we've had very few losses recently. We've had a number of nice gains. This one was a loss for us, and I always apologize for that to my subscribers. We did our best. We tried single-handedly to keep GE up. It wasn't a big, it was a little bit of a loss. But now, most importantly, I'm quite prepared to get back into GE if it starts to rally. But this is just the first sign of an attempt. Now, once again, I'm looking at the charts to see if they're covered in the TFNN channel 1. And these are archived, of course, on channel 11, my show, The Tiger Technician's out. Yeah, so look at this. GE is attempting, after quite a bit of a pullback, in time, not a big deal, took about the same time to come down as it did to go up, and now it's trying to stabilize. If GE crosses that line, gets over 21.53, and then starts to hold, and can hold into by Thursday, by Wednesday of next week, if GE has not taken out the low of 20.97, the low of the 31st, yesterday's low, but instead is getting closer to the 21.78, 21.90 area, I would have to say that that is very good counter-trend action. It is a good sign. And then if we go to IBM, I haven't looked at IBM for a few days, IBM, which is now having a very nice bounce. I have to call this a bounce right now because the stochastic's only at 13%. MACD is trying to turn up. But if IBM in the next few days is able to not break underneath, it's at 197.21. If it doesn't take out the 195 area, 194 area, if it holds 194 over the coming few days, that's another good sign because these are my four horsemen of the Dow. Let's go to Triple M. Triple M is also day. So this is a very good candle. Now, if this candle of Triple M, which is at 89.28, continues higher and it's at 89.28, so if it can get to 90.25, that'll be very important. At 90.25, it says, hey, I might be able to fill the gap between 90.52 and that very sharp pullback the low is 91.50, that area. So that's what I'm looking at. The final one is UTX. Almost went along UTX yesterday. Then decided, you know what? I'm going to hold off a day. I want to see what's going on. Well, this is a very strong leg B. So when you put the package together and you put it together with the TLT, I like what I see. One of the reasons why I wanted to go long yesterday, was that I was looking at certain characteristics, certain patterns that said, bonds could be stuck in a trading range. The dollar, DX, let me just quickly do this with the one hand. Here we go. DXY. The dollar index is stuck in this trading range, just stuck between like 80, let's call it 80.40 and 79.30, and right now it's at 80. And let's go to EUR USD, which I've not updated for a little while, just been out of touch. So yeah, there are. That's towards the lower range, maybe making another U-shaped pattern, but it has to hold 1.287, and right now it's at 1.294. So stuck in that range, but towards the lower end of the range, so it's got to watch this real closely. And the final thing is the VIXI bonds. I just did bonds and dollar. There we are. So now what we're looking at the four horsemen of the Dow improving. We're looking at the VIX pulling back, but not great, but pulling back. We're looking at the euro kind of stuck in this trading range with bonds and with the dollar. So it's individual stocks. Now, this is very important to me. The Dow is up 1.21%. The S&P is only up 1.13. If that's the case, if I'm looking at something that says, Dow has a couple of stocks in it that are more acting better than the overall market. The Dow is acting. There are some stocks in the Dow that are acting better than the S&P. That says that there's leadership there. That is important. But at the same time, I want to see other factors. And those other factors will come back after the break. But those other factors are how are the different sectors are doing? How's the home building sector doing? I'll be right back. Basil Chapman, 877-927-6648. We'll be right back after this.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Our folks, we're back. Basil Chapman and his Tiger Technicians Hour, final segment. Be back Friday, tomorrow. Hopefully, they said by midnight we'll have electric on, but I'm not sure that I'll have it on because I've still got to do other stuff. Yeah, so we'll manage this wave somehow or other. Now, let's just look at this. So how the Philadelphia Housing Sector Index is within 160 open, round number 169.56 is the high. So it's 160. It's within a point of making a new recovery high, which will actually be a new major recovery high in the weekly and monthly. There go the trucks. Oh, goodbye. I guess we're going to be here for a long time. So, that'll be leg B. I don't see any other way I can count it. That is really bullish on the daily chart. That says, whoa, the housing sector can keep going higher. That's the housing sector index. So that's very important. Now, I just wanted to quickly do the U.S. I've been asked about that. I haven't been able to check all of my emails and stuff. But it's trying to balance here. United States Oil Fund, nothing big here. The stochastic split, I just don't see it doing very much. Now, here's something that I wanted to look at. I looked at it the other day. I just wanted to do quickly with Apple. Apple has hit the 9-period exponential moving. Oh, it just missed the 200-period exponential moving average support. Made a doji candle. Now, it's a good sign for Apple as far as the bounce is concerned. I don't really see strength. Today's high, round number 603 high today. 612 would be the level to watch. If it starts to hold that, that could say it could have a pretty nice bounce. Most importantly, you look at stocks like an Apple, look at the Google. They've been hit real bad. I suspect that those winners, those previous winners, are not going to be the kind of sector winners that we're going to see now for any rally coming up. So that's the reason why I'm looking at the GE, the IBM, the UTX, the MMMs, because if they show leadership, and that's what the Dow is showing right now, it says that the rotational correction that began the second summer after the 2009 low, it actually started a little bit before, but I felt it really confirmed that summer because there should have been a much deeper pullback, and it just kept rotating through sectors. So there was some stocks that held the market up and some stocks that were pulling it back. So you got this equilibrium, and there was this rotation that kept the price in a trading range, like a high-level consolidation. So I'm looking at Google saying, hey, you're going to have to do something spectacular to be able to get back to even the 720s. And right now you're at 689, all-time high. They're up in the 774 area. So that, to me, is going to be very important. One other one is Amazon. Now, Amazon had quite a deep pullback. Now you're coming into the holiday season. Surely Amazon should be a winner here, even though the politicians just could not resist taxing, getting all their state taxes slapped on, waiting for Amazon attributes to come. Is that going to come up? Am I online? Oh, I don't know what's going on. Anyway, Amazon, I haven't got it, so it's not coming up yet. I'm waiting for some more attributes. There it goes. Had a little problem now. It's loading. It should come up in a split second. Will it come? Okay, let me just do this because we're going to run out of time. Larry Presidente comes on next. I'm sure he's going to be following up a whole bunch of things and areas that I haven't even been looking at, so that's going to be very exciting. I'm looking at the Dow. Today's Thursday, if by Wednesday at 1:30 in the afternoon, that's Eastern Time, the Dow is under 12,950, that's going to be very important for me because the VIX index should be up in the 20s. I'm looking at these as what ifs, that's all. We have my positions, long positions, short positions, and we get stop down, whatever it is. I don't care. That's the way we're looking at it. But the market itself, if the Dow is closer to 13,500 Wednesday at 1:30, that is a very good sign for early November. So those are my parameters. In case something happens, I'm not able to come on. So thank you for being here on Study the Charts Winter, as great as they usually are. Don't forget, I've got this 2-day webinar, live webinar, December the 6th and 7th. You'll be able to see. This is going to be really exciting. Perfect time for it. I'll be back tomorrow, hopefully, and thanks for being here.